Hello and welcome to a VSA Capital video. I'm Ollie O'Donnell and I'm delighted to be joined by Simon Clarke, CEO of American Lithium. Simon, thanks very much for taking time out of the Future Minerals Forum in Saudi Arabia to talk to me. Um, how are you and how's the mood running up to the conference? It's a bit of a different backdrop this year for lithium.
Yeah, no, absolutely. No, great to see you again, Ollie, and thanks for having me on the show. And listen, I think here it's an interesting one coming to Saudi Arabia. There's obviously been a more and more of a focus in this region on battery metals as well as uranium. And I think the investor appetite is certainly growing in this part of the world. So decent buzz, as you mentioned. Lithium's obviously a lot had come off its highs significantly from last year. I still think there's certainly a perception here that that's probably short term. A lot of destocking in China and other economic factors globally, and most commentators that I see still think that you're going to see prices revert, closer to the high 20s, low 30s in the relatively short time frame, and that would equate to the long-term pricing that we use with benchmark, which is 28,000 a ton. If you look at their latest industry reports and where they think it goes, obviously a little softer in the short term, but returning to a deficit as we move into next year and the back half of the decade. So yeah, no, in general, it's a very positive sentiment. And then, of course, for us, it doesn't hurt. The uranium is $93 a pound now. So more and more interest in Makasani, which there's a lot of zombie projects rearing their ugly heads out there again, which is symptomatic of a bull market. But at the same time, I think there's a recognition that Makasani is a real project that could be moved pretty swiftly through the various phases into production, in its own vehicle and in the right environment, which is what I think we're in now.
Yeah, we'll record a separate video, I think, on uranium, as today we've got a lot to cover, particularly in respect to Falchani, your project in Peru. PEA has just been announced. So what are the headline statistics and takeaways from that announcement, please?
Yeah, I think, Ollie, I would just start by I think it's a reflection of a lot of hard work that our team was able to produce and focus on over the last couple of years, even in challenging times under the last regime in Peru. They were very, very smart in terms of the steps taken to make sure we were able to drill, obviously, which culminated in a big increase in the resource at Falchani at the back end of last year. And that's fed through into an updated PEA, which is very much a key step on the road to pre-fees by the end of Q2. We've also, for the first time, brought in byproducts and updated the operating costs and the capital costs. If you remember, the last report was early 2020, so pre-COVID, pre a lot of the inflationary pressures we've seen. But I'm really delighted with the results. So, just to give you some high-level numbers, the MPV more than triples to 5.11 billion after tax. IRR also after tax at 32%. The OPEX has gone up from about 4,000 a ton, just over 4,000 a ton, to just over 5,000 a ton, 5,093, which in the latest environment, I think puts it even more strongly as one of the lowest cost projects globally. And, certainly low initial capex. The capex has gone up from about 575 million for phase one to 684 million for phase one now. And you've got a profile that sees, 23,000 going up to 45,000, and then, culminating in a phase three of over 80,000 tons a year of high purity lithium carbonate production. So again, really excited and very pleased with how it's come out. I don't know, Ollie. I think some people obviously struggle with exactly what Falchani is, because it's not like the other hard rocks out there, which are typically pegmatite operations where you have a miner, much like they do in iron ore, mining, digging up the ore, concentrating it, shipping it to China, where it's then processed and upgraded and refined into a final product. Falchani, if you remember, produces a high purity product through the flow sheet, a battery grade lithium carbonate. So, people often, and I've talked to a number of people like this, it's much more akin to a conventional gold project or copper, where you're using, you're using a sulfuric acid leach and ending up with a pretty much a final product through the operation. So, just a couple of metrics which may help people understand on giving it a comparison. I mean, if you compare the size of 5.53 million tons M&I and 3.99 million tons inferred to a gold operation at about $2,000 a ton, an ounce, it would be equivalent to a 107 million ounce gold deposit. And then an OPEX comparison, we're at about $5,092 a ton, again at $2,000 an ounce. On an equivalent basis on a gold project, that would equate to about $453 an ounce on the OPEX side. So clearly extremely good margins. And then just giving a bit of scale, our life of mine production over 43 years is 2.63 million tons lithium carbonate. That's equivalent to, again, at $2,000 an ounce, 29.5 million ounces of gold. Annually would be about 686,000 ounces of gold over 43 years. So just again to give people an example that hopefully helps somewhat demystify exactly what Falchani is, but it's very much more akin to a conventional mining operation than, what we see on the pegmatite side of things.
Yeah, and being a vertically integrated project that goes all the way to battery quality lithium, sulfuric acid is a large part of the cost structure, with the processing side of it, the big component. So can you just remind us, are you planning to build a sulfuric acid plant at the mine site? And the other key thing, I think, to the cost structure was that you're using hydroelectric power, so that keeps your costs down and is also good for your carbon footprint.
Absolutely. Yes, we will build an acid plant, and it's obviously the biggest piece of the capex, and then we obviously scale it up as we go through the phases for production. But it's the biggest component. We will use hydropower. We're fortunate enough that we're in an area of Peru with high rainfall, so water is not an issue. There's some very big hydro projects, within 30, 40 kilometers of Falchani, and indeed the power lines close to the project area. So yes, using hydro, using sulfur produced locally, and as you know, in Peru there's a lot of sulfides, and so the sulfur isn't as much of a focus as it might be in North America, and it makes sense for us to build the plant, and that would be the main part of the capex, and sulfur is a big part of the OPEX.
And with respect to the significant, I think 500% increase in the resource, how's that changed the mine life? And also the resource average grades were more or less similar, I think, between the two
very similar
results, but the mill grade is much higher in the project.
Yes, exactly. So So I mean, we were able to reduce the cutoffs a little bit. The economics of the project is so compelling that we were able to do so, but that didn't that we didn't do it to pad the resource, and the huge increase in the resource was largely driven by the drill bit, and so as you say, the economics of the project speak for themselves. The resource itself allows the life of mine. We have close, if you add the categories, which I know you're typically not allowed to do, but you end up with about 9.5 million tons of lithium carbonate. This project, I think we're looking at about a 3,000 ppm head grade through the processing. So we're using about 2.6 million tons of that total resource over 43 years. So obviously the increased scale gives more certainty on life of mine. We have ramped up the production profile a little bit as we move forward. I would say, Ollie, between this and the PFS, these are obviously updated vendor quotes. We're very comfortable with the numbers. I think the pieces that you'll see will obviously move the M&I resource to reserves. There'll be a little bit more work on the optimization. One thing I didn't talk about is those numbers I gave you for the PEA are lithium carbonate only. We do have a scenario where in phase 2 we bring in SOP, and which, as you know, is hugely important for the Peruvian agricultural sector that pretty much imports all of its SOP. So this is a unique project that will not only benefit mining significantly in Peru as one sector of the Peruvian economy, but will also very much help agriculture, which would be another very big sector of the economy. And then we also, for the first time, bring in caesium sulfate. So bringing those in phase 2 takes the after-tax NPV up to close to 5.6 billion, and the IRR goes up from 32 after tax to about 38.5. So, just very excited to be able to do that. When you bring in the credits from those byproducts, it actually takes the OPEX down to about 1.8 thousand a ton. So it starts to be very meaningful.
And what sort of volumes of caesium are you looking to produce, and how does that compare to projects globally? I think Albemarle have been a large producer of the metal historically, but are starting to run down reserves. So how would this project fit into a global caesium market?
Yeah, so first of all, the average production over the life of mine on the SOP side, obviously, again, this starts in phase 2, would be just over 80,000 tons a year of SOP, and we're at about 3,000, just under 3,800 tons a year of caesium sulfate. So caesium sulfate's a small specialist market, but it's very critical to military applications. So every piece you produce, out there, there's a very strong market for it. And this is an initial piece, Ollie. I think we will continue to do work on it, because one of the interesting things we found through our drilling, obviously we focused historically on the volcanic tooth at Falchani, but actually, where you see a lot of the higher grade caesium is in the breccia above and below the tooth. And so, I think there's potential to expand the caesium side as we move forward and understand it more. So this is really an attempt initially to model a pretty conservative number on the caesium sulfate side that we think can grow further as we move forward.
Okay. And so what are the next steps for Falchani now that this has been published?
Yeah, so for Falchani, the next steps, we might do a little bit more drilling. As you know, we filed our EIA late last year. There's a 30-day consultation process on that, which we expect public consultation, which we expect to be completed here very soon, any day, and at that stage we would expect to pretty quickly get approval for that, and that allows us to drill pretty much wherever we want. I think from 420 drill pads across Falchani. So I think if we have the time and we're able to, weather dependent, because we are in the rainy season now, we might put a few more key holes in based on a lot of the work we did in the last drill program. I mean, we know that this is open, in most directions, and the potential to add significantly more is there, even though this is already extremely large. And so I think for us it's about a little bit more work on optimization of the flow sheet, especially on the byproduct side. Perhaps a little bit more drilling, and then obviously reclassifying the resource into reserves are the main things we'll focus on for pre-feed by the end of Q2.
Excellent. And in Peru, what's the latest there? There seem to be signs of stabilization last year with some license awards, some of the majors making positive investment decisions after a period of quiet in Peru and the sort of volatile backdrop. So what's the latest?
Yeah, I think it continues to improve. Obviously we've moved from quite a dysfunctional scenario under the last regime to a much more positive scenario for the overall economy in general, as a big focus for the government, and mining is a key part of that. They did make some commentary late last year that they're going to take a number of steps to streamline things. They acknowledge they have a backlog in permitting, which they're going to look to move through quickly. And thereafter, they're very much also looking to speed up the overall permitting for mine building. So very much looking to encourage growth. And, for us on Falchani, it's already deemed a non-metal, which makes it more like a quarry in terms of permitting. And, the actual process to approve a mine permit application is 6 months. And you compare that to the States, it's a lot faster. And, that continues to give us a lot of belief that the potential to get Falchani to final investment decision by mid next year is very real. So lots of positive signs coming. Obviously, we're still waiting a couple of permits, which we'd hope to see pretty soon. We did also have a very important step in the judicial side of things in relation to the 32 concessions. If you remember, when we acquired Plateau, it's 32 out of 173 concessions. So we very much took the view these projects stand on their own, win or lose, but clearly there is some material impacts, and I think just in general the sentiment that investors would have towards us and Peru and the projects if we get a positive result. So we got a really positive ruling from the Superior Court in Peru. It was followed by Menem and Ingamet looking to petition the Supreme Court as a final nuance, if you like, where they could try and get the verdict overturned. It's such a strong verdict, it would be hard to see that happening. We see it as a last gasp attempt, purely because the legal departments in these government ministries, they're charged with, exhausting every option. And so there's no new facts brought to light. The arguments are all the arguments that the Superior Court knocked down in their entirety and described as baseless. So we don't think it's going to go anywhere. Typically, the Supreme Court takes about 2 months to decide whether or not to hear a petition or not, and in 75% of cases, it's rejected. So, given there's no real question of law here or national security or anything that's would be material to the Peruvian legal system, it'd be very hard to see that this would get through their process. And again, I think really for us this will be, we're very much viewing it that the judicial process every single time has found in our favor. It's been slower than we would have liked, but you can't fault it for finding the right result, and we would expect to see this result once and for all over the next couple of months, Ollie. So, again, I think it's just the final attempt. I think really it allows the legal departments to put a bow on it either way and just say they did everything they could. But the facts of the case are pretty crystal clear in our mind.
Very good. Falchani is obviously only one of your projects. TLC last year you released a PEA. What progress have you made since there, and what's the plans for the year ahead?
Yeah, so I think, Ollie, I mean, we obviously did a fair bit more drilling, the results of which came out in December. One of the delays we saw on the US side was assaying. So even when we updated the PEA, there was a bunch of the previous year drill results which weren't yet in. And we did, we continued to find some shallow, higher grade sections, and continued that drill program. We would expect the resource which is already very large, as you know, to continue to grow on the back of that. The other focus for us was doing a bunch of bulk sampling, and basically optimizing the samples so that they're ready to go through further network. And we're now focusing on, really, for the flow sheet, we're very comfortable with it. As you know, it's similar to LAC and Thacker Pass. Shouldn't say LAC anymore, I guess. Lithium Americas and Thacker Pass, similar flow sheet, very similar OPEX, 7,500 a ton. But we think we can refine things further on the pre-concentration side. We successfully pre-concentrate and take the head grade from 1,400 ppms up to over 2,000, that goes into the processing. So we think we can optimize that further. There is a fair amount of lithium losses still when we go through the impurity removal. If you remember, clay stones we find are very amenable to acid leach, but it's obviously quite a dirty leach, and you have to remove magnesium and calcium and iron and other impurities, magnesium being the biggest one. And so we think we can optimize that and reduce losses. And then we're looking at things like counter current, which is another way of optimizing, where I think, obviously our biggest input is sulfuric acid and sulfur costs, and I think we can reduce those more. And so, we're looking at a PFS on TLC, probably Q4 this year would be the target. And the real focus for the year now is on the met side and optimizing that flow sheet and, moving forward from there. We have started a lot of the long lead items for permitting a mine. Probably still 2 years in the US, even though, as you know, we don't have any environmental issues or endangered species, and we've been very proactive on the cultural side and don't see any issues there either. It's clear that it's still going to take 2 years to permit a mine under the current regulations, and so we've started a number of the environmental and cultural pieces that we would have to do for that, so that once we get the pre-fees done, we can then flip pretty quickly into permitting the mine, and obviously at the same time run a bankable fees process as we move through that 2-year process.
And you mentioned Thacker Pass. Now that that's demerged, is that a big read-through with milestones to come there for American Lithium, and also your investment in Surge, now that you're perhaps starting to consolidate in Nevada?
Yeah, no, absolutely. I mean, we are the second biggest M&I resource for sure on the claystone side, and probably the closest comp in terms of flow sheet to Thacker. And so it's a very good read through. I do think you'll see the DOE confirming their support of the project. Probably with a $1.5 billion commitment to build the mine. Thacker started some of the long lead items on that build, and I think that'll be a really positive signal for Claystones, and very much a signal that the U.S. government, it's not interested in financing some of these pegmatite projects where you still have to ship them to China for refining. I mean, that's not going to help a critical minerals initiative to decouple or de-risk. So I think it's, we expect to see it, and I think when we do, it'll be very positive for Claystones in general. Whether that's TLC, I mean, Surge is obviously a lot earlier stage. The reason we made that investment is after 6+ years in Claystones, we've got a very good understanding of the nuances. They have, I think, the best grades found on the Claystone side to date. Now, as we all know, grade certainly isn't everything, but it can be a lot. And I think we like it. We know the guys well. They're the guys who founded Millennial or built Millennial Lithium. A number of them are, and I think we like the fact that we made an early investment, and I think we have a board representative, and I think there's the potential for some kind of strategic tie-up if the project continues to evolve and they continue to work well with us, which they do. And so I think we'll see how it all evolves, Ollie. But I think the Thacker situation will be really positive for both. Surge is relatively close to McDermott and Thacker, and so I think it is quite a good read-through, but with even better grades. So we're excited about the investment. We're excited about where TLC is at, and I think we're going to see the U.S. government really start to fund the Claystones as really big projects that can make a material impact on lithium production domestically in the U.S. relatively quickly.
Excellent. Simon, that's been a huge amount to cover in a relatively short space of time, but thank you very much for taking time out of the conference to speak to us, and good luck for the year ahead.
Sounds great, Ollie. Thank you.